Imagine waking up one morning to find that the world's most powerful government has quietly gone offline. No data, no updates, no official reports about jobs, inflation, or consumer spending. It's as if someone pulled the plug on the global economy scoreboard. For a moment, everything feels calm. Until you realize something strange, the stock market is still climbing. The same companies that should be nervous are celebrating. The same people who used to panic at uncertainty are now pretending nothing's wrong. And here's where the story begins. When the US government shuts down, you'd expect chaos. But the financial markets, they dance like it's good news. Because in a world addicted to easy money, bad news often becomes fuel. When the government freezes, investors start whispering the same three words: rate cuts soon. They believe the Federal Reserve will ride in like a hero, slash interest rates, and flood the system with liquidity again. Cheap money means higher stock prices, and for a while everyone feels smart, but what if this time the hero's blindfolded? Normally, the Fed makes decisions based on mountains of government data, unemployment, inflation, GDP. When the government shuts down, those numbers vanish, so the people deciding the world's financial future are flying blind. Imagine a surgeon forced to operate without x-rays. That's the global economy right now. And still, investors cheer, because they don't trade on facts anymore, they trade on faith. Faith that someone, somewhere will always print more money. Let's pause here. If you were told that America's entire economic system depends on a hunch, would you believe it? Because that's exactly what's happening. Without real data, the market clings to private sources. A payroll company here, a corporate report there, each treated as gospel. And when one of those reports shows job losses instead of gains, the market actually rallies. Because in this twisted logic, weak news means more rate cuts, and rate cuts mean profits. This is not investing, this is addiction, the kind that turns every crisis into an excuse to gamble harder. Here's the irony. Every time the system looks broken, it's quietly being reset to make the rich even richer. When official inflation data disappears, prices on paper stop rising. But in the real world, your grocery bill still climbs, your rent still burns, and your salary still lags behind. The illusion of stability hides a silent transfer of wealth, from savers to speculators, from workers to holders of assets. And the best part, it's all legal. The game isn't about transparency, it's about perception. Because as long as people believe the numbers look fine, the machine keeps humming. And when they stop believing, the players at the top already have an exit plan. Now let's zoom out. While headlines scream about shutdowns and tariffs, something bigger is happening under the surface. A reshuffling of global wealth unlike anything we've seen in decades. Gold is climbing, silver too, not because people suddenly rediscovered ancient metals, but because deep down, they don't trust paper promises anymore. When confidence cracks, people return to what feels real. And that brings us to the paradox of bubbles. People think bubbles are dangerous, and they are, but only if you're late. If you recognize one early, a bubble isn't a warning, it's an elevator. You ride it up, then get off before it snaps. The trick is to know when you're holding the door and when you're holding the rope. Every generation faces its own version of this game. For our parents, it was dot-coms and real estate. For us, it's AI and the illusion of infinite growth. But the pattern hasn't changed. Money flows in circles. Company A pays Company B, who invests in Company C, who buys from Company A again. Everyone books a profit on paper, even though no real wealth was created. It's like three friends passing the same $10 bill around the table and congratulating each other for making sales. The economy grows, the charts look healthy, and the press calls it innovation. But it's still the same $10 bill. In the next part, we will continue directly with the AI era illusion, the loop of fake growth, and how small investors can actually benefit without becoming collateral damage. Today's market is built on theater, not the Broadway kind, but the kind where billion-dollar companies play both hero and audience in the same act. They invest in each other, buy from each other, and celebrate the profits that never left the circle. Look closer. The companies building AI chips are the same ones funding the firms that buy those chips. The data centers buying cloud services are the same ones renting servers to the sellers. Everyone is selling to everyone, and the same dollar keeps getting recycled until it shines like gold. It's a magic trick, really. Except the magician keeps the real gold while you clap for the illusion. This loop creates numbers that make headlines, record profits, explosive growth, the next big thing, but there's one detail missing: a customer. In the real economy, growth means people buying things they actually need. Here, the only customer is the hype itself. You can almost hear the rhythm of it. AI company buys computing power. Cloud company reports record demand, chip maker announces record sales, stock prices jump, everyone looks rich. But the money? It never left the room. When real consumers finally enter the story, they find the shelves empty. No clear product, no real need, no lasting value, just the echo of a promise. And yet, the world believes the promise. Investors cheer, politicians smile, they call it progress. But progress that feeds on itself eventually runs out of air. This is how every bubble breathes, until it can't. And when it pops, everyone looks for someone to blame. Usually that someone is the last one still holding the stock. You might think this is a reason to stay away from markets entirely, but that's not the lesson. The lesson is to understand which side of the game you're on. When the giants move in circles, small investors can still make money by watching where their momentum slows. The wealthy need months to sell a position. You can do it in minutes. That speed is your advantage. That agility is your safety net. Don't fight the tide. Learn to surf it, but there's another storm building. The trade war that once sounded like distant noise is about to return, louder, sharper, and more deliberate. Tariffs on Chinese goods are back on the table, and buried inside those new policies is something few people noticed: a tax not on goods, but on trust. When America raises fees on Chinese-made ships, it's not just about protecting industry, it's about signaling dominance. It's the economic equivalent of a stare-down, one that forces the rest of the world to pick a side. China, of course, doesn't blink. It answers with restrictions on rare earth metals, the materials that make up the skeleton of modern technology. Without them, there are no chips, no sensors, no AI, and when those shipments slow, the illusion of endless AI growth begins to crack. The moment supply chains freeze, investors panic. They'll say the crash came from trade tensions, or from bad data, or from politics, but deep down, it's the same reason every bubble bursts: belief ran faster than reality. When the narrative dies, money looks for safety. It doesn't disappear. It migrates from tech to gold, from growth to shelter, and that migration is where fortunes quietly change hands. Most people see this as a crisis. The few who understand it see it as a reset. Money never sleeps. It only changes address. And right now, it's packing its bags. Next, let's continue with the idea of wealth migration, how bubbles secretly enrich those who prepare early, and why chaos always creates new winners. Every collapse hides a transfer. While the headlines talk about losses, someone else is already counting gains. The fall of one market is the birth of another. When money leaves stocks, it doesn't vanish. It flows into gold, silver, bonds, or even cash. And for those who saw the wave early, it feels less like disaster and more like arrival. That's the quiet truth behind every so-called crisis. It's not the end of wealth, it's the relocation of it. And the people who understand that, the ones who treat chaos as currency, never really lose. Gold and silver are not exciting. They don't launch products or trend on social media, but they do something the modern economy seems to have forgotten. They hold. When you buy a stock, you buy a story. When you buy gold, you buy silence. And sometimes, silence is the loudest statement of all. Because when data disappears, when institutions shut down, and when the people in charge guess instead of know, the only numbers that matter are the ones in your own account. There's a reason the oldest investors always circle back to metals. It's not nostalgia, it's memory. They've seen this movie before. In 2008 and 2000, and long before that, markets built on promises eventually break under their own optimism. Each time the world resets, but the rules remain the same. Those who hold real values survive. Those who chase momentum fade with the charts. We're entering another one of those moments. The kind that feels like an ending but is really an invitation to reposition, to prepare, to think not in headlines but in decades. When you see the next wave of panic, the tweets, the charts, the sudden experts, remember this: the people shouting the loudest are usually the ones who are already trapped. Real investors don't panic. They wait, they watch, they move when the noise drowns out logic. This isn't about fear, it's about strategy. You don't need to predict the future. You just need to recognize when others have stopped thinking for themselves. That's your moment. That's when the transfer begins. Imagine holding 10 million in cash during a market collapse. Most would call that safe. But if the currency itself loses 10% of its value, you've quietly lost $1 million without a single trade. Safety can be an illusion too. Real safety is in positioning, not protection. It's in knowing where your money sleeps and how fast it can move when the alarm rings. Every cycle resets the scoreboard. The top 1% changes faces. And the next generation of investors rises, not because they were luckier, but because they were less distracted. Wealth doesn't vanish in chaos, it simply changes owners, and the people who end up owning it are the ones who kept their eyes open while everyone else blinked. Before you click away, remember this. Every storm, every shutdown, every so-called collapse, it's never just destruction, it's redistribution. The people who stay calm when others panic, who move when others freeze, are the ones who write the next chapter of wealth. Don't let this wave pass without learning how to ride it. If you found something in this video that opened your eyes, that made you think differently about money or about control, do one small thing, share it. Send it to someone you care about, someone who deserves to see what's really happening beneath the surface. And if you want to keep growing with us, hit like, subscribe, and leave a comment. Tell me what part of this story hit you hardest, because every thought you share keeps this community sharper and stronger. You're watching The Passive Path, a place where we don't chase noise, we study it, where wealth isn't just about numbers, but about clarity. I'll see you in the next video. Until then, stay calm, stay curious, and may your next move be your smartest one yet.